earnings season is not over yet because Adobe just reported a few minutes ago. And again, the stock is trading lower in after-hours trading after the full-year forecast, especially on the revenue side, came in weaker than expected. So let's bring in Anurag Rana, Bloomberg Intelligence Senior Technology Analyst. And Anurag, when it comes to revenue for the full year, Adobe is giving numbers that don't meet the average analyst estimate. What part of the business is not measuring up to what investors were expecting?
I would say just mildly disappointing. It's only 1 percentage point or 2 percentage point less. And that's in the digital media business. It's also in the digital experience business. But frankly speaking, Adobe has a history of starting the year low and then, I would say ramping up as the year goes along. So I'm not that surprised with it. Also remember the stock's up over 80% this year. So, it's giving us a little bit of that back at this point.
Okay, and also it perhaps it's just being conservative in terms of giving guidance overall. There was a new number that it gave everyone, which is digital media net new annualized recurring revenue, about $1.9 billion. I know this is not a huge amount by any stretch of the imagination, but that was also a little bit lower than expected. Can you talk us through why this is significant?
Yeah, so if you look at it, that's one piece of business that I think the street was expecting to be around $2 billion or so. And I'm fairly confident that by the time a year from now, it will probably cross $2 billion. But what really is happening over there is in this particular business, they have created a new product called Firefly, which is a generative AI product that can create images with using your prompt command and stuff. This is where you will see the most benefit for Adobe in terms of any of the AI initiatives. So I think that's really why that number really is the most important metric at this point for Adobe over the next 12 months.